Hey guys, welcome back to the channel. This is the second video in the playlist whereby I break down and explain investing and trading terms for you so that you have a better understanding of this investing and trading terms and how you can better use them for your investing and trading. In this video, I'll be talking about the earnings per share of a company or EPS and how you can use EPS when you invest and trade. As always, if you find these videos helpful and have received value from them, do leave a like on the video and make sure you're subscribed to the channel. All of this will go a long way in helping the channel grow. And without further ado, let's dive right into my conversation. Earnings per share or EPS of a company is defined as the monetary value of earnings per outstanding share of a company. So we can find the EPS of a company by doing a quick Google search or on the many financial websites available out there. So that being said, we still want to know how we derive the earnings per share of a company so that we can better understand and use it for investing and trading. So to derive the EPS of company, we subtract the preferred dividend from the net income of a company and then divide the amount by the company's total shares outstanding. So the EPS formula will be, as you can see on the screen, EPS equal net income of a company minus the preferred dividends divided by the total shares outstanding. So how do we as investors and traders use the earnings per share of a company? We use the EPS of a company to compare a company's profitability. So as a general rule of thumb, the higher the company's EPS, the stronger the financials of a company. So we want to see our company or the company that we are analyzing to have high EPS. The higher, the better. So to find the net income of a company minus the preferred dividends, we want to use the financial website. So let's take a look, for example, Microsoft. So the net income of a company is in the company's income statement. So I'm going to go to the Microsoft income statement. So as you can see, it's the income statement. Here's the net income. So what we want to look at is the income available to the common stock. So this one, what this means is the net income minus the preferred dividend. So this is the number, 36,797 million. It is in millions. So this is 37,797 million. So the next thing we want to look at is the company's total shares outstanding. So remember the formula of our EPS is the net income of a company minus the preferred dividends and then the value divided by the total shares outstanding. So as you can see, Microsoft total shares outstanding is 7.61 billion. So let's do a quick calculation. So the net income will be 36,797. 36,797 divided by 7.61. So divided by 4.83. So the EPS of Microsoft is 4.84. Then let's take a look at and double check. So you can see here the EPS for the previous 12 months is 5. So there's a slight difference because we are using different website. One is Finviz. This is Finviz. And I got the net income of Microsoft from Reuters. So sometimes different websites have different, they report different financial numbers. So, but as we can see, the difference is not by a lot. So it's 4.84 compared to 5. So the difference is not a lot. So we won't want to be too particular about the difference, but it's close enough to suggest that the EPS is around 4.84 to 5. So that's how we calculate the earnings per share of a company. So when viewing the EPS of companies, we want the EPS of companies to be as high as possible. So the higher the better. So to recap, we can calculate the EPS of company by taking its net income minus its preferred dividend divided by the total shares outstanding. So the EPS of a company indicates to us the profitability of a company. The higher the EPS of a company, the more profitable it is considered. So the EPS is an important variable that we use to determine a share price. Furthermore, the EPS is used in the calculation of the P ratio of a company. So in my previous video on P ratio, we learned that to calculate the P ratio of a company, we take the stock price of a company divided by its earnings per share. So the P ratio can then tell us the value of the stock in terms of how much other investors and traders are willing to pay for each dollar of earnings. So the EPS of a company by itself tells us how much earnings an investor can theoretically get from owning a stock of the company. I say theoretically because a company may choose to reinvest its profits back into its business rather than redistribute its profits to its shareholders. So in spite of that, the EPS is an important indicator of how profitable a company is. And I hope that you have learned something in this video, and I'll see you in the next video. To your financial success.